Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, I'm Vijay Bhambwani. I'm a trader since the last 36 years, and through my videos, I want to help my viewers take better trading and investment decisions. Today's video is specifically about whether you should be holding on to the shares of companies that deal in metals. I have made videos about the metals supercycle, or so it was called till last year. And if you go down in my playlist, you will realize that I have been debunking the supercycle theory, giving you ample number of reasons, some of which I will recap very briefly in this video. You see, primary reason for the metal markets to go up, metal prices rather to go up, was cheap and easy availability of unbacked currency which needed to be invested someplace. And after pushing share prices up, commodities, currencies and bonds etc. were par for the course. It was but natural. Secondly, the reason why I said this metal supercycle is superficial at best and it's a creation of the imagination of non-trading experts was that at Darukhana, which is at Masjid Bandar, Mumbai, which is the largest metal scrap dealing market in Asia, I went and talked to a lot of people and they said, Vijay, we are not keen on buying scrap metal at all at these lofty prices. We are only interested in selling the accumulated stock which we have purchased over the months, over the years, because we do not think that these prices are likely to remain. So here are doers of deeds who actually are involved in the trade, who are telling you that these prices are unlikely to hold. The third reason which I gave you was most of these Latin American countries, which are called LATAM countries, are major exporters of industrial metals. They are up to here in US dollar denominated debt, which is unfortunately rising for them. So their forex loans are becoming untenable, unserviceable and actually causing a lot of distress in the economy. Some of these, and rather many of these countries, are also net importers of essentials, and that's leading to imported inflation, especially if they're importing fuels. Fuels are multiplier commodities. Transport, food, shelter, clothing, everything becomes expensive if fuel prices go up. So these countries would have no recourse but to export more of metals to raise cash, which would break the metal prices. And therefore, the metal supercycle was on skid row. It was walking on banana peels. It was likely to fall. And look at the way the prices of aluminium, copper, lead, nickel, zinc have really gone down pretty badly, and that's disadvantage for the bulls. Now that we've established that the primary underlying commodity, which is metals, are falling, should you hold on to company shares which deal in these metals? Now here the answer is not just a cut and dried yes or no. It's a little more complicated than that. Now there are two types of companies that deal in metals. Number one are the miners. They dig into the earth, they extract these metals and then they sell them. For them, the price of finished products is going to go down, which means lower profits. These company shares are not really good buys. Then there are other companies that consume metals. For them, metals are raw materials. For them, the raw material prices are likely to come down. Initially, with the meltdown or the mini meltdown rather in the stock market, even those companies' shares will fall. But they will recover faster because sanity will prevail and people will say, hey, look, these guys do deal in metals, but they are not extractors or miners of metals, but they are consumers and their raw material prices are going to go down and their profitability is going to go up. So let's buy their shares. Now, I'm not making a buy or sell recommendation. I'm giving you a hypothetical example. Let's take aluminium, because aluminium has collapsed more than 100 rupees from its recent peaks, and that means over a 30% decline in price. On one hand, you have Hindalco, which is a mining company. It digs into the ground, extracts aluminium and sells it in the market. That is going to make lesser profits. On the other hand is TTK Prestige. It makes those pressure cookers. You know the TTK Prestige jingle, जो बीवी से करे प्यार वो Prestige से कैसे करे इनकार. These guys actually buy aluminium to make pressure cookers and other home utensils and appliances. For them, the raw material prices are going to go down. I repeat again, this is not a buy or sell recommendation. I'm merely trying to illustrate my thought process based on my 360-degree worldview, which I employ to take trading and investment decisions. Which one of these two companies would you rather buy? Hindalco, for whom aluminium is the finished product, or TTK Prestige, for whom aluminium is a raw material? Obviously, you would want to buy the stock of a company which is likely to benefit from falling prices, all other factors remaining constant. I'm not giving you examples of the profitability or other aspects. This can't be the only aspect that you take before buying a stock. Like I said, it's just an illustrative academic example. So whether should you hold on to your metal stocks, you should hold on to those companies which will be consuming metals. If those companies are actually mining, refining, smelting, or selling metal as a finished product, I'm afraid you're not exactly in for good times. Now, somebody would ask me, Vijay, prices of Hindalco, Tata Steel, Jindal Steel, etc. have really fallen hard and fast. Do you think declines are still in the offing? Now, at the risk of making myself unpopular with my viewers, I'm in the business of staying profitable, not in the business of staying relevant. So I've been told before about saying unpopular things like metals are not going to see a super cycle, so go ahead and make my day. So should we not hold on to these companies because the falls have been too much? Let me assure you of one thing. You and me are nobody to say that the fall is done. It's too much. A bottom has been reached. Let Mother Market tell us that the market bottom has been made. And using statistical data, nowhere is weight of evidence emerging that bottoms have been made. So should you hold on to your metal stocks? Like I said, consumers, yes. Producers, no. Let's be careful out there. More videos in the coming days. Till I meet you in my next video, this is Vijay Bhambwani signing off for now, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I always welcome your comments. Also, help me reach out to fellow like-minded investors and traders and smart viewers like yourselves by referring my video to your family and friends. Thank you. Have a very profitable day.